We are live for the first time, and in this session, I'm going to be going over number one, what happened yesterday at the Fed meeting, what they announced, how that differs from the previous Fed meeting just 6 weeks ago or so, what has happened in Nashville in the real estate market over the last 30 days or so, what yesterday's Fed meeting most importantly means for you if you're on the fence about buying a home, if you're thinking about selling a home and then buying a home, if you've got an investment property and you're thinking about, do I sell now? Do I wait? Do I buy another investment property? So we're going to be talking about that. And for anybody that joins live, or if you're watching this later, drop a comment. I'll see it and we'll answer it. If you have any, we'll have a Q&A session at the end. If there are no questions, I do have a question that I was asked over the this past weekend that's very relevant for this, and I can share from there. So that is kind of lay of the land for this video going into the Fed meeting yesterday. So here we are, December 14th, 2023. Yesterday's Fed meeting. So we had a couple of pieces of information kind of leading up to yesterday's Fed meeting. One being that unemployment came back just this in the past week, a little bit better, just slightly better than expected. Wage growth, very essentially what was expected. Wage growth. Now, how that differs from about 6 weeks ago is at the Fed meeting 6 weeks ago, and sort of these key pieces of information, which are essentially, wage growth, CPI inflation, which is basically the cost of, groceries at the store. Is that going up? Is it going down? And at what pace? So unemployment, wage growth, CPI, those are really the main, and unemployment. Those are the main factors. And what's interesting is that when economic news is positive, it's usually bad for mortgage rates and vice versa. So what happened 6 weeks ago? What happened 6 weeks ago was that unemployment was actually higher than expected. It's like bad economic news. And what else? CPI. Inflation was actually, there were several numbers that were actually sort of worse than expected for the economy. So what happened to mortgage rates? They bumped up a little bit. So compared to yesterday's Fed meeting, the Fed came out and said a few things. Essentially, they said, hey, we're not raising rates anymore. And they also indicated that there could be 3 cuts over the course of 2024. That's massive news. Fed rates are not directly tied to mortgage rates, but they are directly tied essentially to the rate that banks pay interest, and all that is tied to bond rates, which are directly tied to mortgage rates. So the Fed rate is very indirectly tied to mortgage rates. So yesterday, when they said, hey, essentially things are about as expected, we're not raising rates anymore, and we might even cut 3 times next year. Holy cow. That lowered the 10-year Treasury quite a bit to the lowest it's been in months, which has a direct tie to mortgage rates. And mortgage rates are now, because of yesterday's meeting, are now at the lowest they've been in quite some time. So I'm saying that today is the most exciting time in real estate since mid-2022. About 8 weeks ago, mortgage rates had peaked at about 8.03%. Okay, so compare that now, we are at, call it mid sixes. And if you want to pay a point and buy down, you can be in the low sixes. What that means for somebody like you who might be looking to, buy, or, whether that's your primary residence or an investment property, is that your mortgage that might have been, $2,000 8 weeks ago is now closer to $1,500 just because of the interest rates. So we haven't seen this big of a dip in rates since, probably 2020, maybe early, probably first quarter 2021. So this is really big news for anybody that is on the fence about or in the market to buy a home, whether that's residence or investment property. So that's what's going on with the Fed, and that's what it means for you in terms of your mortgage rate. Here in Nashville, this is also, we're going to share the sort of last 30 days, what's going on in the market. Homes for sale in Davidson County are down 20% in November year over year. So inventory just continues to, and sales continue to shrink. That's different than sales price. The number of transactions can go down greatly, and it may or may not have an impact on price. So the number of homes for sale in Davidson County is down 20% year over year. New listings in Davidson County are down 4% year over year. Days on the market, the median is 14 with an average of 27. I can remember back, years ago where the average days on the market was over 100, call it 2009. So 14 median, 27 average still sounds like it's flying to me, but that is much different than a year and a half ago when the median was probably 2 days or something like that. So it's the highest it's been since January or February of this year, and then before that the highest days on the market was January 2020. In terms of Williamson County, homes for sale are down. The number of homes for sale is down 17% year over year. New listings down 7%. Days on the market, very similar to Davidson, essentially the same. All right. So what we are seeing when it comes to prices seem to be fluctuating up and down, maybe 1% over the last several months. In the winter time, we will see prices soften, maybe just a touch, like nothing significant. Nobody's getting a smoking deal just because it's December. December is actually one of our strongest months, oftentimes. So, but there's been a little bit of fluctuation within, say, 1 to 1.5% in Davidson Williamson over the last couple of months. We're seeing that right now, where prices are down probably 2% year over year, maybe down just a touch from the previous month. It's hard to say if this is, well, we can't say if this is a trajectory, but could be beginning of a softening. We'll see. Until yesterday's news. Yesterday's news to me changes everything. Yesterday's news with the Fed and what it has done to mortgage rates, like all bets are off. We're just going to have to wait and see, because when affordability improves so much in such a short period of time, we're just going to have to wait and see what happens. So that is what the Fed said, what it means for you, what's going on in the national market. And then lastly, I don't see any questions. But one of the questions I got over the weekend, I was at the gym, working out, obviously. And a friend of mine who owns rental property said, "Hey, I've got a property in this neighborhood in Nashville, and I'm thinking about selling it. And what should I do?" And knowing his situation, I'll unpack this a little bit, but the bottom line was, if I were you, I would give it another year and I would wait. Okay, so why is that? Everybody's situation is going to be a little bit different, but I knew his situation well enough to know, number one, it's doing well as an investment. 2, it's not a big headache. 3, he doesn't need the equity out of it. So he's not experiencing some great pain to get rid of or anything like that. It's just, he really wasn't expecting to keep it long term, and so that's where he's at. So why did I say that? Because essentially all the factors that would motivate him are pretty close to neutral in his life. So my opinion, my prediction is that a year from now, his property will be worth enough more that it makes sense to hold. The other thing is that it has a tenant in it right now. And if he were to sell it, so 2 things are going on. Number one, it is hard as heck to sell a home with a tenant in it. Number one, oftentimes availability is an issue. Number two, it is just not going to show well. I don't know in 17 years I've ever seen a home that showed well with a tenant in it. It just doesn't happen. Whereas if a tenant's out or if it's your primary residence, you can take ownership of staging the property, making sure it looks really, really good, making sure it's fully accessible, making sure it's, top-notch clean. There's not like stuff laying around. It just looks really good. So that's a challenge. The second thing is just that let's just say their lease was up tomorrow and it was vacant. Well, now he has a vacant home that he's really not sure if he wants to sell. The number of transactions are sort of going down. Again, this is different than sales price, but transactions are sort of going down. So it makes the sort of predictability and certainty less that we're going to get a contract at the price we want than as if sales are going up. And again, this was before the Fed meeting. This was last Saturday. So if we fast forward a year and rates have been less and transactions are beginning to go up, it makes the predictability, and therefore he has less risk if he puts the home on the market at that point, with or without a tenant. Again, I've shared my opinion on what you should do there. So that was a very relevant, recent conversation based on the market with somebody who could sell, but they don't have to. I hope this has been helpful. We're wrapping up. Be sure to like this if it's been helpful at all. Should have asked you early on, but if you're still watching, hopefully it was valuable. Please subscribe. We are trying to keep this 100% organic. I don't ask my mom to come on here and, interact with our videos so that we boost anything. This is 100% organic, relying on people that enjoy this content to help us get this content to other people like them that would also find it helpful. And you can help us do that by liking or subscribing. Thanks for watching. We'll talk to you later.